What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 29th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to have a candid one-on-one conversation with you guys, not only talking about the past year in review, taking a look back at 2023 and talking about where we got things right, but also where we got things wrong. And outside of that, share my forward outlook into 2024, talking about what may come next year and what major things and events we should be prepared for when it comes to our strategy in 2024. We got a lot to unpack here in today's video, as well as a sponsored review of XYO Network, a really interesting data infrastructure protocol in the crypto space. So stay tuned for it. You guys won't want to miss it. And if you happen to enjoy the video, consider dropping a like. It's a great way to support the content here on this channel. All right, guys, let's go ahead and kick things off. Now, I want to start here by talking about the first question that is on everyone's mind. Taking a look back at 2023 and essentially rating our performance. A lot of traders out there, and a lot of content creators probably for that matter as well, don't take the time, in my opinion, to go back and look at how they performed over a certain period of time. And I do not shy away from this. It is the only reason why over the last 12 years, while I've made a ton of mistakes in equity markets and commodities, Forex, and crypto as well, that I've learned from those mistakes and been able to come out on top making much more money than I lose at the end of the day, essentially allowing me to grow my portfolio over the long term and not only keep on par with passive investing, but outpace those returns. The key point here I want to make at the end of the day is that for me, this year I feel was a break-even or slightly bad year. The reason I say that and why it's probably not one of my best trading years is quite obvious here, guys. Crypto markets definitely went in a different direction than we thought for the majority of the year. When it comes to Bitcoin, when it comes to some of the other leading cryptocurrencies like Solana and Avalanche, some of the few disruptive plays that have really continued to make sizable returns and make a solid comeback, we were wrong on some of these plays. We not only missed them as trades, but outside of this, well, they continued to climb higher throughout the year. I'll say that firsthand here. There's no need to dodge around that. Bitcoin continued to climb here at a time where we had sold our positions around 25K in August of 2022. We dodged the further downside of potentially selling into capitulation at 15K, but Bitcoin has continued to rise here as there have been the anticipation of the ETF. Those are really the big mistakes we made here. And I think the other one as well is obviously the continued disruption as well in 2023, where instead of equities continuing to correct, right? And as we sold our assets around a time here in August of 2022, where the S&P 500 was at 4,300, we still didn't buy the dip and ride the 25% move we saw in US equities, generally speaking, depending on which index you're looking at. So that's where we got things wrong this year. And to be honest, we didn't make that move up to the upside, but I think there's important nuance, and there's a reason why I say that it was a okay year, because we didn't lose money, right? And this is a big thing that I want you guys to understand here. Not at any time in this year did we build a sizable position shorting the stock market, shorting Bitcoin. We were considering it at some points, but the setup didn't feel right. And as you guys can figure out if you're part of the Dash Report group and probably from our content, you've never heard me mention that we're in a short position. Some people like to watch a minute of the video, they look at the thumbnail of the video, and then they already conclude where I stand and where I'm positioned. We have not had any major short positions in Bitcoin or cryptocurrencies. And I say that with confidence here because while I can still hold a bearish opinion and not be optimistic on the potential for a long extended bull run, it doesn't mean that you always have to be positioned in the market. Sometimes cash is king. And while it wasn't the case here in 2023, it doesn't mean that I've had a loss of a year here. There are going to be thousands of opportunities you get in your life as a trader, guys. Let me tell you this. I've learned this over 12 years. Most people have first started trading in crypto just over the last few years. Some are better than me, no doubt about that, but many as well fall into the same traps that I had learned way earlier on in Forex markets and in equities. If you over leverage yourself, if you get overly optimistic, if you chase every opportunity rather than thinking about preserving and protecting your money first and foremost, you will lose out. And I'm sure there was actually a lot of people who got the call right that markets were moving up this year, but through all types of different avenues, whether that be over leverage trading and therefore getting liquidated, buying into meme coins that rug pulled, using speculative DeFi protocols that had another exploit or hack, whatever it might be, right? Or buying deadweight narratives that you probably underperformed or potentially lost a lot of money. And for someone like myself who's been break even this year, practically speaking, making very few trades, in that case, we've been doing okay. We're sitting here. We still are much better than where we were back, say, in like 2019, 2018. We're well positioned in that sense over the past few years. We made great returns back in 2020 and 2021, and we locked in a lot of those returns during that period of time. So I'm candid about talking about where we got things wrong, right? Now, the thing I want to talk about, though, is I think we got a lot of things right in this past year as well. And I say that confidently because the one thing we constantly warned about in this channel is that we are going into an environment that doesn't have a massive expansion of liquidity. And one of the calls we made with confidence here is that not only historically speaking, Bitcoin is the first play to make a move versus the broader market, so it's best to probably avoid altcoins in the first place, as altcoin cycles are very rare, and altcoins really only garner significant dominance when we get towards these short windows of time where it's visible and clear in the charts. But outside of that as well, because of that insignificant increase in liquidity, I know there's been some bumps here and there in global liquidity, we haven't had the Fed and other central banks mass printing money. And for that, we have been consistently warning that it's best to be avoidant of altcoins. And you can see here, whether you're talking about probably the most defensive altcoin play, one of the most established, Ethereum is down 23.6% against BTC this year. You'd be much better off just have simply DCAing or buying Bitcoin, right? So again, there's important nuance here to understand the market. And sure, Ethereum is still up for the year. I'm not going to doubt that if you're looking exactly at where it was in 2023, yes, it's still up here. But we were right in the sense that if you are going to be taking a long position, it's not to be in Ethereum or XRP or BNB, which is down nearly 50% even after the resurgence here as altcoins have started to garner more dominance. When we've started to flip a bit more bullish on our tune here, right? And we've made some really great calls on altcoins, right? We talked about the dead weight narratives of the last cycle. Matic down 50% here against Bitcoin. And as many of you have noticed, since late November and in December, we started to get a little bit more bullish on altcoins that there might be some good short-term setups, not long-term. I mean, guys, if the narratives here are meme coins that are making up the majority of the market, that's blanket speculation. And speculation can go on for some time, but it doesn't go on indefinitely. And it certainly doesn't have the same weight as DeFi did in 2019 or any of the more solid narratives like smart contract infrastructure back in 2017. My main point here is that right now we are seeing what may be the beginning of a short-term move in altcoins to the downside. A breach of the 200-week is usually your sign here. When you get that significant momentum, we talked about those double-digit moves, drops, and dominance, and we've gotten a 2% one here in this past week. That's the kind of stuff we want to see here. And in this short-term window of time, while we had been in cash throughout this year, while many people would say, oh, you missed Bitcoin, you missed that, whatever, right? Or the 25% move in the S&P 500. Trust me, in crypto, you can make that overnight. In this case, we got our narratives right. We got the narratives right in crypto. We talked about Bitcoin-related infrastructure, such as ordinals and stacks, a smart contract platform for Bitcoin or a layer on top of Bitcoin. And we also talked about how meme coins are the focus. Over this last month, some of these plays have made phenomenal returns. Ordinals, when we started to talk about it around 21 to 19 bucks, found support at the 21 day. And if you've been following this strategy here, guys, that we've echoed, when momentum kicks in, we look at market leaders, we look at how they test on the 21 day, and ordinals since then has charged forward here. It's at 77 bucks here in practically a month. A lot of people would say, oh, Nick, why are you promoting buying ordinals up there? Well, it continued to charge forward. If you guys look at any of the major altcoins we talked about here the past few weeks, we talked about a very select few, ones that are in solid narratives that have been curated here, that are plays that we're watching here in the market, and they've done solid here. Stacks, another one. We were talking back in a prior video about not only ordinals, you can see here again, watching for this potential retest of this range here, coming down, getting it in on this dip here near one of the prior ranges of resistance. But you can also see this as well with stacks, that we were talking about it back in around 64, 65 cents. And if we go here to the chart, stacks is at $1.50 right now, well on its way to potentially tripling in value. So my point here at the end of the day, guys, and this unfortunately again is the kind of nuance that people who are just rushing to make judgments, or, you know, I understand this as well. There's some people who have been like, you know, kind of dollar cost averaging long. Some of you even watching this channel who might, again, believe that I'm completely wrong on the markets and stuff. a lot of people, unfortunately, they get a bit tribal about their positions, and that's understandable. I've been there before. It's something that happens when you're in financial markets. You fall in love with your positions, or you're in desperate need to be in a position that's going to be right because of inflation, because of economic troubles, whatever it is, right? I completely understand that from like a psychological level. We're human, right? Everyone can be like that. But unfortunately, that tribalism allows people to lose the nuance that people like myself, who have been mainly in cash for the first 3 quarters of this year, can come back swinging when momentum kicks in. My specialty is altcoins. I know that here in this channel. You guys know that if you watch this channel since 2017, we know how to spot altcoin momentum, and we know that it's the only place, pretty much at this point, you are going to make serious life-changing returns and not have to risk all of your capital, right? You can be 25, 30% of your disposable capital or income in altcoins in a year, and you can make absolutely life-changing returns that can set you up not only for retirement, but can also put you in a position where you can make a serious down payment on a home and just make money that's going to simply put you in a better financial position. But you also know when you come here, guys, that we're not going to push that you trade on leverage all the time, that you have to capture every single move, you're going to miss out. This isn't a casino. My channel is built around quality content about preserving and protecting your capital, guys. I'm a macro investor at the end of the day. I love exponential industries that are developing new technologies and are really leading the way forward. But in the macro environment we've been in over this past year, just because 2023, yes, it's been a huge upset year, right? We're not focused on 1-year performance, we're focused on the long term. And in a year where liquidity has been draining from the global economy, where inflation is still sticky above 2%, it's around 3.1% in the US, much higher in many other countries, and outside of that as well, you generally have no solid narratives here in crypto beyond, maybe a narrative there of Bitcoin-related infrastructure with the ETF and everything, right? Otherwise, there's not too much going on in crypto. So again, we were confident in making some of these calls here this past year. Now, there's one big thing I want to let you guys know about before we dive into 2024, right? I think, again, to summarize 2023, we had a lot of great positive things that we nailed right, avoiding altcoins until really we see significant dominance drop in Bitcoin. And outside of that as well, we got the right narratives when it did come time for us to get a little bit bullish towards the end of the year with altcoins starting to move. And along with that as well, we didn't time things right with Bitcoin this year. We didn't get the right call on where Bitcoin was going in price. I'll say that outright. There is something, though, that I'm really looking forward to in 2024. And one of those things is that I want to take DataDash towards a further extent than where it's been over the last 6.5 years. We've been covering crypto markets for the last 6.5 years. And while I definitely love crypto, I love covering financial markets, I would love to continue expanding the DataDash brand. I want to get more people involved in creating quality content out there. I think there's a need for that more now than ever as we're going into what may be a potentially exciting period of time over the next few years in financial markets, again, for better or for worse. So I want to let you guys know that we're opening up a forum here where for anyone out there who would potentially like to become a video creator on DataDash, someone who not only could be another additional face to the channel, creating content and research, but also just helping to create other types of interesting research and spotting different opportunities and tailoring towards different types of trading strategies. I would definitely love to hear from those of you out there who might be interested in that. We're looking to get some new faces, expand it, and get more content out to you guys. And I thought the best way to do that is to probably start, if we are considering something like that, to reach out to you guys out there in the audience. Those of you who love the daily updates we put out here, the kind of content, the kind of approach that we take. And hopefully we can get someone out there who can also help and join in and be a part of that experience. So I'll leave the link down below in the description if you guys would like to consider being a part of the DataDash channel and helping to get people set up in the right direction here when it comes to investing and trading. But now that we've spent some time talking about 2023, as well as what we have planned for the channel in 2024, I want to go ahead and dive into the topic of the new year. I want to talk about the 2 major focal points or major events that I think we need to keep an eye on when it comes to financial markets next year. One of them is obviously the topic of a Bitcoin ETF, but there's a second topic that I think no one is focused on right now, where a lot of the real opportunity is going to come, and they're positions in which I would not only feel comfortable putting sizable capital into, but are positions that are not going to do a 2, 3, or 5x, but potentially do 10, 20, 30x's, if not more, over the next few years, where crypto, I honestly think, may not keep up. I'll explain this. So I want to go ahead and talk about, obviously, Bitcoin here. All right. You guys already know how I feel about altcoins. I think there are some short-term moves in altcoins, some good trade setups. We take advantage when there are Bitcoin dominance flushes like this. But Bitcoin dominance this time around, right, is nowhere near where it was in 2020, and certainly nowhere near where it was back in 2017. It just, unfortunately, can only expand so much. And it's looking like over time that altcoin dominance has not grown bigger since 2018. So the focal point here is the focus on the institutionalization of Bitcoin with the launch of a Bitcoin ETF, right? So when we're talking about big picture trends for 2024, I want to talk about whether or not I genuinely believe Bitcoin is going to go higher or lower next year. And I gotta be honest with you guys, you probably know where I stand on this if you watch a lot of my content, but I want to explain again why I personally believe, while we're gonna be watching the trend, the moving averages, and whether or not Bitcoin's generally setting higher lows and higher highs, that's what matters most, right? I'm sharing with you now what my opinion is and how things are going. It's a broad prediction. I care more about the trend though. I wanna make that clear. We're gonna watch how it plays on the trend, but if you wanna know where I stand, I'm standing on the side of history. Every single time. It's almost a meme at this point. It's like such a joke how, like, if you really focus on the simplicity of things, it plays out much better for you in the long term, right? If you don't get caught too much in over analysis on the market, it's the simple things that really help you know when markets are going to top. And one of the biggest ones is when there are these big events like the Bitcoin futures contracts that launched in 2017. That pretty much exactly timed the top of the market. When Coinbase, largest cryptocurrency exchange in the United States, IPOs at a whopping $85 billion valuation. A company that is still, throughout the majority of its history, burning through capital. I have nothing against Brian Armstrong and Coinbase. Great company in many respects. But yeah, like crazy huge opportunities like this are usually the pivotal moments when we feel that, you know, crypto is unstoppable. Everyone's got heightened figures in their mind about where prices are going to go, right? Because of these big launch events, because of broadening adoption of the market, broadening access to the market, that is exactly when markets tend to top. And these were at times, you know, where, again, crypto was trading at much higher momentum and premiums, right? And now we've got this new spot Bitcoin ETF here. I gotta tell you guys, if this is really going to be transformative, we should be, and this is guaranteed to happen, we should be at new all-time highs. But we're not. If there are hundreds of billions of dollars of liquidity just waiting on the sidelines, even the upper tens of billions, you should see Bitcoin at a much higher rate. But we're not seeing it. And I think the reason for this, guys, is because this has been a buy the hype, sell the news event. That's where I stand, guys. I'm not trying to be biased here. 2023, great year. Bitcoin did well. And again, the trend is strong right now. You know, 2 week here, every single 2 week candle since back here in September and October. Remember, we did the video where we came out and we said very clearly that yes, we got the past few months wrong of consolidation. It didn't end up going down, right? From that point on, we haven't been saying that Bitcoin is absolutely set to crash if you actually watch the videos, right? We said that there's a good chance that something like that could come eventually, but that Bitcoin right now, so long as it holds in that 21 day, is still charging forward, right? So the trend is still holding up here, right? I don't doubt that in the near term. But if you're asking for my opinion in 2024, if I had to, you know, kind of give you a bet on whether or not Bitcoin is going to be at 70 or 80K, you know, going up 100%, roughly speaking, from this point on, or going down, say 50% to something much more conservative like here, you know, in the 20K range here to 30K range, I think there's a very good chance that it's going to be going on the lower end. And I know that that's not the popular opinion to have here. I know some people would say I'm crazy, but I would just say at the end of the day, guys, like, what about crypto as an industry makes us feel better about it now than it did, say, back in 2020, 2021? Do we have any chance of having a major spur of liquidity that could drive that ramp up to 70, 80K? And Bitcoin has had a lot of false narratives alongside the hype around the ETF, that got it to this point. How much more are we going to need to get this up to, say, 80K to new highs? I think you're going to need a lot. And even if that's the case, even if Bitcoin goes up to 80K, let's just say right now, let's say I get it wrong, right? Maybe I'm blindsided, maybe I'm biased, as many people might argue, but let's go ahead and consider the fact here that even if Bitcoin does do that into an ETF, again, 100% move, sounds exciting, doesn't really interest me that much. It really doesn't interest me. And I'll tell you why it doesn't interest me, guys, because I'm used to the Bitcoin that in a year makes 300% moves, 500% moves, 1,000% moves, right? Where Bitcoin can make exponential returns. Those days are gone. They are no longer the case for Bitcoin here. And the reason that's the case is because Bitcoin as an asset is already a massive financial instrument. It's hundreds of billions of dollars in market capitalization. And I understand some people believe it'll go on to replace gold, and maybe it does do that in the long term. Maybe it does. But that doesn't happen overnight just because of an ETF. It takes a long period of time for stuff like that to materialize. And who knows? Can Bitcoin do that over the next decade? I'm not shooting down that idea. But I can tell you guys, there are going to be some sectors out there that outpace Bitcoin big time over the next few years. If I'm playing my cards, putting them on the table, giving you my clear, honest opinion, we got some sectors on our radar, and unfortunately, they're not in crypto, right, that are going to do multiples from the current valuations. Even if we just get one of these 3 bets that we're watching right now correct, we will likely outpace Bitcoin over the next decade. Those sectors we're watching, we're going to cover firsthand in the Dash Report, and we will eventually talk about them here on the channel. But I'm going to be sharing with those who have been the biggest supporters and backers of our channel here. Those who are standing by us here, who are trading in that mature mindset of focusing on the long-term preservation of capital. And we will be talking about it here on the channel from time to time. We will get into it. I'm not trying to gatekeep information, guys. My main point, though, is that these are sectors outside the crypto space, and they're sectors people aren't watching right now. But they have got the markets of scale. They are small mid-cap plays in regards to global U.S. equities. They're not the FANG stocks. And outside of this, well, they are sectors that have the narratives there to easily multiply 10, 20, 30x from where they are now. All right? So we need to have our eyes on those sectors, because when I take a look at Bitcoin, I don't see that narrative there that Bitcoin can do another 10x here in the next 2 or 3 years. I don't buy that. I don't see Bitcoin going to 400K. If you want to get access to crypto right now, you can get access to it. It's been that way for a long time. And institutional investors who are, some people are having to wait for a Bitcoin ETF if you're talking about people who unfortunately can't access ETN products. But the thing is that they can go out and buy MicroStrategy today. MicroStrategy is a pseudo Bitcoin ETF. MicroStrategy has been satisfying those needs by diluting its share base and essentially using that capital raise to go out and buy more Bitcoin. It's acted as a de facto Bitcoin ETF, or at least at a minimum a way to front run ETF. So if we've only been seeing a couple $100 million, or I think in total net it's probably been about $1.5 billion this year that was raised in common stock raises for MicroStrategy to go out and buy more Bitcoin and act as a pseudo Bitcoin ETF, then how much can we really expect from the institutional wave that everyone's really predicting with the Bitcoin ETF? All I'm going to say here, guys, things are great in 2023. There's an optimistic year for crypto, but don't get caught on the sidelines. Be focused on plays that are actually fundamental, that have that multiple potential, that could potentially be seriously disruptive. Focus on areas that are showcasing those signs of confidence in the trend, but that no one is watching. And that is where you're going to find those sizable plays over the next few years. So if you're interested, again, I want to let you guys know that you can not only sign for the Dash Report here at the current rates. We've kept prices the same for 5 years. We are going to be raising them in 2024. So if you want to lock in and grandfather those rates, we've had a lot of people signing up and stuff. I'd love to have you guys join us on the Dash Report when we cover those sectors in the newsletter, as well as our market updates. But outside of that as well, We've also got a review we're going to be diving into here today on a project that genuinely excites me, and that's the one that's focused on data infrastructure. You guys know we were focused a lot on Chainlink and a lot of Oracle plays in the early days in the crypto space because we understand the significance of this for smart contract applications, for enterprise blockchain, for DeFi, NFTs, you name it. Well, in this case, we're going to be doing a review here today of XYO Network, which is leading forward in providing a long-term data infrastructure for smart contracts and various use cases in the crypto space. So let's go ahead and kick things off. Alrighty everyone, so in today's sponsored review, I want to spend some time to talk about a leading crypto network when it comes to data infrastructure for a variety of Web3 use cases such as DeFi, the metaverse, and even more traditional enterprise applications of smart contracts. Today we're going to be talking about none other than XYO Network. Now there's a good chance you've already possibly heard about XYO Network. They've been around for a couple years in the crypto space, building core data infrastructure for a variety of Web3 use cases, but outside of this as well, XYO Network has built a solution towards a variety of bottlenecks that have prevented many of the great applications many have wanted to see in the Web3 and crypto sector over the last few years. And I want to talk a little bit today about not only some of the ambitious roadmap items they have planned for 2024 that you should be keeping an eye on, but we need to start off with the basics and understand why this emphasis on solving for the data issue in Web3 is so important and why the technologies that XYO Network has built are incredibly valuable towards solving these problems. We got a lot to unpack here in today's review, so if you guys happen to enjoy it, consider dropping a like and let's go ahead and kick things off. Now, I want to start here with the basics. Why is XYO focused solely on data within Web3? And how is data an issue in the world of Web3 and smart contracts? We need to take a step back and understand that since the inception of smart contracts on Ethereum, coming up on nearly a decade ago, back around 2015, 2016, a lot of people at an early stage saw the promise of smart contracts to essentially execute automatic operations without the need for a middleman. Smart contracts can act as autonomous agents or contracts that allow for certain inputs to provide certain outputs. And a lot of the really exciting applications many people had predicted nearly a decade ago that many were hoping would come to the space have unfortunately not arrived yet. Because of this limitation, over the last decade, there were serious limitations to smart contracts. And the biggest one being that you don't have a clear, reliable, and transparent source of data that you can access. And sure, there are solutions like Oracle's, which we will talk a little bit about later on, but there are important differences with XYO that allow for more core applications to be utilized in a functional way and in a more trustless and reliable setting. So we're going to talk about that here. We first need to understand here what kind of issues you run into when it comes to data that XYO primarily solves for. There are three core reasons why XYO serves as a valuable platform for storing data and utilizing it for a variety of Web3 applications, many of which cannot survive unless these three principles are met. All data on the network maintains principles of sovereignty, provenance, and permanence. Now, I'm going to go ahead and break these down one by one, and I think sovereignty is probably the easiest to understand because many of us have heard the term data sovereignty. This means that essentially on the XYO network, you own your own data. So whether that's an individual who wants to monetize some of their personal data in order for companies to utilize it for a variety of applications, or a corporate entity that has a large data set for some enterprise application, you own that information on the network and you have control over that information and who has granted access to it. So it's not just publicly uploading all of your information or data onto the network. But outside of this as well, we have provenance, which essentially plays a big role within sovereignty as well. When it comes to provenance, there are two big parts that I want to talk about here. You not only have the more self-explanatory point here, which is making sure that you know where data was created, essentially where data, who submitted that data onto the network, all of the key essential details, as well as a sort of audit trail essentially of that data over time and if there's been any changes. So there's always a clear record of the information itself on chain that is verifiable. But beyond this as well, Being able to be compliant with various rules like GDPR in Europe allows for a whole range of applications to foster utilizing XYO that just couldn't exist before. I have personal experience in this. I've worked with a variety of different players in the enterprise blockchain space, advised for a project over the last 4 to 5 years, and the biggest issue we always ran into is that we would build some great proof of concept, and then it would get to the point where finally when it came to actually implementing it, you got bottlenecked by not being GDPR compliant. So this is a big solution here when it comes to data management in Web3. Provenance allows for a whole range of new applications to be built and deployed for enterprise companies that just couldn't be built before. And then permanence, which is probably the most valuable of all. And this is where XYO might start to open up some question boxes for you, because many of you probably heard about oracles in the crypto space, which XYO is also focused on as well when we talk about the 2024 roadmap. But when it comes to providing data, an important thing to understand is that there are a lot of applications that require, again, as I mentioned earlier, a historic record of data. Oracles provide essentially real-time data on a variety of different types of variables, whether that's market price data or different types of inputs that we need to track. But the problem with the oracles is that at the end of the day, they are not serving as a almost ledger of information. And in case of XYO, you have data permanence. This means that you have long-term storage and access to that data for a variety of applications. This is really important here for building long-term lasting applications, especially in enterprise blockchain, but also as well in DeFi and a whole range of other areas of Web3. So this is again where XYO adds this essential core value by managing these three values when it comes to data on the network. And in 2023, they had a huge focus on self-sovereignty and delivered on a whole range of roadmap items, not only mainly focusing on improving their tech stack, such as their SDK and APIs, but along with that as well in Q2 and Q3, focusing on a lot of applications that showcase how you can actually utilize XYO for self-sovereignty, such as their Forever inventory, which is essentially tracking your Netflix data and allowing you to essentially have ownership of that exported data to monetize it or utilize it in various applications. But outside of that as well, LifeHash, which is a project that's still in progress that will allow you to have a decentralized Know Your Customer KYC profile, allowing you to use it for a variety of applications and have again a self-sovereign way to verify your identity across many applications and decentralized apps within crypto. And these are just some of the things that they did between 2023, but they've come a long way on their roadmap and are starting to look towards 2024. And a lot of the big advancements that are coming in 2024, I think, are going to unlock some of the big applications we've been waiting to see in the crypto space, such as geospatial tracking of location. This is going to be a really big thing when it comes to IoT or Internet of Things, essentially allowing for a lot of real-world enterprise applications utilizing smart contracts for execution across a variety of L1s and L2s, but utilizing the XYO network at its core in order to manage and track that data and track inputs of that information as well. Outside of this as well, they have a couple different things coming down the pipeline. They're not only going to be enhancing their SDKs and APIs, but along with that, they're going to be launching their own Oracle solution that's going to allow for reliable information to come into the XYO network. So no longer is it just a matter of storing long-term data and information or getting access to that information on the XYO network through marketplaces or purchasing that data of some sort, but also being able to pull real-time data as well. So XYO is looking to be a full 360 solution when it comes to these data inputs for a variety of Web3 use cases. And on top of that as well, they've also got a whole range of things. They're going to be having their own smart contract integration, which is going to allow for more sophisticated types of transactions on the XYO platform, and of course cross-chain compatibility. So they're able to communicate with much more chains and allow for much more data inputs for a variety of applications across different ecosystems. This to me is a pretty ambitious roadmap, and I think while it's a lot to take on for 2024, it showcases here that the XYO team has been building here to build the ultimate data solution within Web3. And it's definitely something that you should take a look at, especially when it comes to the decentralized apps. They have a library of some very nice minimal use cases here about how XYO's data sets can be utilized for a lot of core functions. A lot of the big grandiose use cases we can think about in Web3 rely on core essential pieces of data to function. And once we start to understand that, you start to get a real picture as to how big XYO as a technology could be for these different types of use cases, no matter how small or ambitious they might be. A big thing to understand as well is the different types of core modules within the network. This is a core part of the infrastructure that allows for XYO network to function as intended. And they play different essential roles, from collecting data to storing data to, along with that as well, validating or verifying information. So much that goes into the process is distributed across these different core modular types like the archivist, the bridge, diviner, node, sentinel, and witness. So it's essential to understand that if you want to build on the network or really understand how XYO network functions, they not only have some great primers and details here on the website where you can get familiar with things, but outside of that as well, you can dive into more technical resources like the white paper that will showcase from a deeper dive perspective how all these different parts of technologies work together. Above all though, if you understand at its core the surface level issue here, which is data transparency, data reliability, and being able to have a core central home for data that isn't reliable totally on oracles or outside external forces, but will allow for smart contracts to have that reliable ledger and data set to work with for a variety of different pieces of data. I think this is why the XYO network, or the XY Oracle network, is essentially going to be valuable for a variety of different use cases we have yet to see in the crypto space. If you're looking to get developing on the network and contribute to the XYO network and potentially build some really exciting applications, whether that be for more Web3 focuses, of DeFi or the metaverse, or enterprise applications, I recommend you guys check out XYO at the link down below in the description. They're looking to not only build some of the best tools here for developers and add a whole new range of functions in 2024 that will allow for some really exciting things that weren't available before, especially the geolocation tracking. But outside of that as well, it's going to allow you to get up to speed here and see whether or not with their SDK and API, if you can build some really exciting things, maybe even for the company or industry that you're working in currently. So I highly recommend you guys dive into it. It's one that I'm keeping on my radar personally. We were very early on this channel to spotting Chainlink and many other emerging plays in the crypto space, especially when it comes to this topic of data. And while it may not be the hottest topic at the end of the day when there are meme coins and, Bitcoin related infrastructure, which we've talked a lot about here in this channel, data is essential for any of the major real world use cases when it comes to Web3. And if we understand that principle and we can keep our eyes focused on those who are building the best infrastructure for data, I think XYO has got a good shot here of stealing the center stage over the next year or two in the crypto space with some of the next level improvements that they have planned on the roadmap. But that's it for today's review, guys. Again, if you enjoyed it, consider dropping a like. And if you have any questions as well, you can definitely dive into the docs on their website as well as the white paper. But that's it for today's video, everyone. Thank you all so much for checking in as always. I hope you all enjoyed this review, but until the next video, I'll see you guys in the next one. Take care, everyone.